Hey everybody, it's Jeff Gibby at Metastock. I hope you're doing well. Thanks for joining us tonight. Like I said, I'm Jeff Gibby at Metastock. I'm going to read a legal disclaimer. Regardless of whether you joined us on Facebook or YouTube or Twitch or GoToWebinar, I guess GoToWebinar doesn't really count, but we would really, hey Kelly, I think your mic's still on. We would really appreciate it if you give us a like and a subscribe. It helps a lot, helps a great deal. Make sure to say hi if you're coming in through YouTube. If you have questions for Vincent or on any of the platforms, I've got them all open and we'll make sure that we get the questions to Vince if you have them. So feel free to ask. So our guest today is Vince Vora. Vince is somebody that we've been partnered with. Oh my gosh, it's been a while. I was living in California when we started doing all this stuff. So it's been at least a decade. Vince is a very, very well accomplished system designer. He's created some of the most popular systems that we've had for Metastock. I particularly like the methodologies that he talks about when he starts to talk about slope and designing slope and kind of the slope and looking for trend and the indicator that we designed around finding those. I particularly really like when he has to talk about money management and really not risking money you can't afford to lose and that kind of stuff. He's very, very thorough, very, very specific. One of, I'd say, probably the better presenters that we have. Vince, welcome to the room today. We really appreciate you being here. Again, I know I said so many kind words about you before, but it's always great to have you in the room. We always appreciate having you. And we go ahead and it's your turn.
I appreciate you inviting me.
Let me send you the presentation though for the controls.
Okay. Okay, you should be able to see my screen.
Looks good.
Slide. Okay, excellent. Well, thanks again, Jeff, for the invite. It has been amazing working with you and everyone else at Metastock. Like you said, I think it's been over a decade now, but it's been great. And the last couple of years, we focused on our victory method, which I am still trading with daily. It's something that, for me, after all the years of trying different systems and indicators and combinations, it's just something that's very simple but very effective. So I'm happy to share it with everyone. So thanks for being with us, everyone. I'm going to try my best to get through as many charts as I can with you in the next hour. I want to show you all the features of our victory method add-on using Metastock, and hopefully along the way give you several hints that will help you in this market environment, regardless of which trading system you're using. So if you have a system you're using now that you're comfortable with and are happy with, by all means, let's try to make the most of the hour and give you whatever we can while we're here together. So let me bring up my Metastock platform. Here it is. And before I explain what you're seeing on here, all these arrows and circles, etc., I just want to say I want to make this as interactive as possible. So I will select symbols at random to show you. But by all means, if there's a symbol that you want me to have a look at for you, please type it into the chat. And at any point during the presentation, if you have a question, by all means, type it in there, and we'll try to get to it before the end. Okay. So this is our victory method, which I created just before the whole COVID pandemic hit. And the reason for this was to have something that would help us identify strongly trending markets and keep us on the right side of the market, but yet get us out of there very quick should things start going against us. So I'm a very, very big believer in trading with the trend and momentum. Those are two things I will never trade without. And so it is super important at any point, regardless of the system that you're using, to trade something that is very orderly. And by orderly, I'm talking about something that, when you look at a chart like this is the SPY, the S&P 500 on a weekly time frame, but we can look at any time frame. You want to see that the bars are pretty much, the same size, And you just get a very orderly routine. Move up, a move down, and move up with these slight pullbacks back and forth. If you get a chart that's completely messy and choppy, that is all over the place, it's going to be very, very difficult for you to trade. No matter where you get in, the likelihood of you getting stopped out is super high, and that's why you want something that has sort of an ebb and flow to it, that's very smooth. And we'll show you many examples as we go through. Now, on here, I have the victory method, which plots these arrows, these little exit flags, and these circles. So the arrows are obviously the areas where we want to consider either going long at a green arrow or exiting or going short with a red arrow, and definitely exiting with an exit flag. So now, I want to state the whole intent here is not to take every single arrow, not to take every single signal. Okay. Um, Based on the programming and the formula, there was no way to avoid, you know, the ones that weren't as high of a probability without, uh, eliminating some of the good ones. So I'm going to explain which ones you want to focus on and which ones you don't. And it is actually very, very simple. This blue line that you see here is the 20 period simple moving average. As I hover over it, you will see it's a 20 period simple moving average based on the close. Now, you could use an exponential, weighted, etc. I don't. I found over my many decades of doing this that this is the one that I can rely on the most. And I will prove to you today that if you're on the right side of the 20, it's very difficult to go wrong in the market. Meaning, if price is above the 20, you definitely want to consider being long, whatever market that is. If you're below the 20, you want to be out of that market or maybe consider shorting it, depending on the pattern. And we'll talk about that as well. But so many people get married to a particular company. Now, I follow technicals, right? I'm a technician, so I follow technical analysis. So many times I don't even know what this company does. I know the company has a symbol. That's it, right? But there are many examples where you get a nice run up, and then that run ends up completely reversing, and you come all the way back down and you completely reverse that move. And a lot of people, they're making a ton of money on the way up, and then they end up giving it all back. And that can be avoided by one simple rule. And that is if you're below the 20, you get out of there. Very simple. Okay. So now, the other thing about the 20 period moving average is that it's a great indicator of momentum. So Jeff referred to the slope. We worked on a calculation for the slope for several weeks, but we finally got it working properly, and it's been super, super helpful. When you see a slope like this, okay, that's significant momentum in the direction of that trade. So what you want to be looking for are trade setups that happen not only near the 20, because the idea is to get it in near the 20 and have price push away from the 20. But you want to do so with slope. So we can tell when we're in a trend by looking at the pivot points, right? And saying, do we have higher highs and higher lows? If we do, that's an uptrend. If we have lower highs and lower lows, that's a downtrend. But how strong is that trend? Well, the stronger the degree of slope, the better. So this 20 period moving average, the stronger the slope on it, right, the better. So in other words, you can have a slight slope, right, or you can have a very significant slope. So I would consider a significant slope something of about a 45-degree angle, right? Something like this. A move like this, a slope like this is even greater. So the higher, the better, right? And you'll be surprised and how helpful that is. When you walk away from this session today, I want you to just go and flip through charts. Put the 20-period moving on, 20-period simple moving average on your chart, and just flip through as many charts as you can. And you will notice that when you have that slope, you're almost always moving higher, right? When price is above. And if you're below, regardless of what it is, you want to get out of there. So now the arrows are when the combination of indicators behind this formula come together that are telling you to get in on this trade. And if we see a green arrow like that, we want to then look at slope on the 20-period moving average. And if it is sloping, okay, sloping in the direction of the trade, sloping upwards, then we definitely want to consider taking that trade, okay? If it's flat, we're not as interested, okay? Then we're likely in a channel and we want to wait till we get a break out of that channel. So I'm going to show you several examples, but as you go through this, have a look at the arrows and the circles that happen near a slope and how many times the trade works out compared to not working out. Now the circles here, what this means is that the same formula that came together here has come together again. The reason why it's a circle is we're already in the trade. So this is telling us that it's a re-entry. Okay, so we can either add to the position we're in, or if we missed the first one, we can now consider getting in here. And same thing here, right? We can either add to our existing position, or if we miss the first two, we can now get in here, okay? So you want to take the arrows and the circles that are along a slope, and you want to do so when price is closer to the 20, not far away, all right? Any arrows or circles that happen when the 20 is flat, you want to disregard that. What you want to do is take your trend line tool, okay, mark the highs of that channel, the highs and lows of that channel, and wait for a breakout one way or the other, okay? That's how you want to treat these, and we'll go through it. So you can see here that the S&P 500 was trending very strongly, and along the way gave us several great entries to profit from, right? And then eventually started to roll over. And look what happened to the 20-period moving average. It completely flattened out and is now sloping lower. So again, we had a red arrow, slope lower. That's a signal to go short, and worked out quite well so far. Okay. Now, the time frame does not matter. We can look at a chart on the daily time frame, on a weekly, a monthly, on a 1 minute, a 3 minute, a 5 minute. All depends what you prefer and what you're trading. But what you want to focus on, as I said, are the entries that happen along that sloping 20-period moving average. All right. So feel free to type in whatever symbols you want. I'll just throw on a few. Let's start with the NASDAQ, the Qs. Okay. Again, on the daily time frame, when you're in here, you're getting green arrows, you're getting red arrows. You do not want to trade in here. Okay. There's a lot wrong with this. First of all, can we say we have higher highs and higher lows, or lower highs and lower lows? You really can't, right? It's a mixed bag. That's telling you there is no clear trend. So by you getting in there, it's just like rolling the dice, right? Walking into a casino and choosing red or black. Which one is going to be? Who knows? It's just the luck of the draw, right? So in other words, the odds are not in your favor at that point. And look at the 20-period moving average. Is it sloping higher or lower? It really isn't either way, right? Kind of going sideways. So the best thing to do, you mark the highs, you mark the lows, and you wait for one of those to break. Very simple. When it's trending, it's very clear, isn't it? You have price continuing to make higher highs and higher lows. When you get those pullbacks, you have a nice slope, you get that arrow, you get in, and you follow that trade along the way. Okay, very simple. Opposite happens, 20 rolls over, it's sloping lower, you're looking only for red arrows or red circles to get in. Okay, now, why do exit flags show up sometimes but not others? Well, it's because sometimes if we're in a short trade like this one and you get an exit flag, the reason for it is it's not telling you to go long at the same time. It's just telling you to exit. And then you'll notice there's a couple of yellow bars. That means we do nothing. We're not supposed to be in the market at that time. We're supposed to be out of the market waiting for a new signal to come together. Other times when we're short, it'll tell us to go long immediately. Okay. And that's why there's no exit flag, because we can't show the exit and the arrow or the exit in a circle, at the same time, right? They would overlap. So we go from red to green immediately. Now, would I go long here? I would not. I am extremely conservative. So I stick to the highest probability trade setups, which are the ones that happen with slope in my favor. This is at this point in time on this candle, what I would consider a counter trend trade. Now, it ends up working out well, but I don't care. That's to me a high risk trade. So if you are, can tolerate a lot more risk than I can, you may want to consider these at some point. But I would suggest you ignore these and just use it as an exit signal. Okay, let's look at a few stocks. Citigroup, right? We've seen the financials, in some pain recently. What are we looking for? This is very, very simple. You bring up any chart. What are you looking for? You're looking for a trend, a clear trend, one way or the other. In this case, if you were to focus on the far right of the chart, what do you see? A clear downtrend, right? From one pivot to the next, right? These turning points. What do you see? Lower highs, lower lows, right? It's pretty clear, right? And what's the 20-period moving average doing? It is sloping lower. Is it not? Very clear and a pretty significant slope. So what do? You patiently wait for price to come back towards that 20 and then give you that red arrow, right? When you do, on that bar, let's say it was this bar here, you mark the low of that bar, and one tick or 1 penny, that if it ever trades 1 tick or 1 penny below that low, that's when you short it, okay? And you follow that trade through until it tells you to get out. Now, if you go on a substantial run, you don't have to wait all the way until you get an exit to take some profits, right? Especially in a market like this. The challenge trading today's market is not whether or not we're trying to figure out which way this market is moving. It's the volatility, it's the back and forth, right? One day we're down 300 points, the next day we're up 400 and vice versa, right? So you saw the last couple of Fridays, we were down like 900 points. Today we're up 900 points. It's kind of all over the place. So you want to be a little quicker to take your profits during those times. When the market is just slow and steady in a very clear bull market or clear bear market, and there's not a lot happening news-wise, but it's just a slow grind in one direction, those are the markets that you can stay in trades a little longer. But along the way here, what you want to do is start to scale out a little, right? So let's say you bought 1,000 shares, you want to scale out 300 and leave the other 300 for the end, or 10 option contracts, etc. It could be 3 shares. You exit one at a time and you let the third one run, and so on. And we can show you how to set targets as well for those. But again, if we just take a quick glance at any chart here, here's a perfect example of an area where if you got in here, right? Even if you didn't get stopped out, if you wanted to hold on, it'd be dead money for months, right? Several months. Why would you want to have your money earning nothing for you for several months? So when you have that flat 20-period moving average, you're usually in a channel, and you can easily spot a channel. What you need for a channel is at least one touch on one side and two on another. So in other words, let's say price started here, you got up here, you touched, and then it came back down here, right? Touched, and now it's here, and now it moves up here. Now, what do you have? You have one touch on one side and two on the other. You already know at this point you're in a channel. You just don't know how long it's going to remain in that channel. So back here, we can draw the highs and the lows, and it doesn't have to be perfect, but where we connect as many as we can. Well, we could have started drawing one right back here. So um, uh, even going a little deeper in, okay, let's say we hadn't recognized it here. When we touch here, we touch here. Once we come back here, we know we're in this channel. Now look how much longer we remain in that channel. Look how many arrows and circles happen. If we had taken every single one, we would have shorted, stopped out, gone long, stopped out, shorted, stopped. Now, keep in mind, losses would have been minimal, but regardless, dead money. So what you want to do is you want to wait until we break out one way or the other. Once we break out, we go short and boom, we have a winning trade, right? And we go from there. Otherwise, to keep it even simpler, just wait until you have slope and pick off the ones with slope. Very, very simple. Okay. Let's see. I think it's Quan who's asking for CVX and XOM. Sure. Let's have a look at CVX and XOM. Chevron and Exxon. The energy sector has been performing amazingly well for quite some time. And so here you go. For the longest time, this was consolidating. It really wasn't going anywhere, was it? Suddenly, if we draw the trend line across the highs here, we get a break right now. Would I have taken this or not? It's not what I would consider a high probability trade. I would have taken the breakout, but not as much as I would have taken a trade like this. So on any given day, you're going to do a search for trades. If you have one as clear as this one, then that's the one you take. And you don't want to pile in many trades, all in at one time. You want to spread your trades out. What I would suggest is you pick the one or two highest probability trade setups for that time frame, and you go with that. So if you're trading on the daily time frame, one or two trades a day max, that you'll be in there maybe for a week and a half, 2 weeks each, and hopefully you'll catch some real nice runs. Look at this one here, right? You get a real nice slope, you get that arrow, and boom, right? Now, what we haven't talked about is, do all of them work out or not? Of course not. Nothing's perfect. But what you'll find is if you stick with the slope, is that the majority of them will. If you're strict with the rules, the majority of them will. And let me tell you, there are plenty to choose from. This is not going to be, you're not going to have a difficult time finding trades, trust me. And when they don't work out, the losses tend to be small. We cannot avoid gaps. Gaps do happen. It is part of the business, but it's very rare. Mostly, these are very, very small when they don't work out. Yet you get some real nice winners when they do. So what you should find with the victory method is that you should definitely have many more winners than losers, but also your winners should be much greater than your losers. So that math really works in your favor. Okay. But going back to this, once this trend broke and we started to slope here, right? We could have just waited until we got that first entry. Now, this one didn't work out great. Didn't result in much of a loss, maybe a break even or a slight loss. But then we were pretty flat, right? So again, what do? You mark the highs and you mark the low. Oops, let me lock that in, right? And you mark the lows and you wait for a break one way or the other. Okay. Now it broke here. Again, if you're not that comfortable taking the breakouts, you ignore it, you wait for that next pullback, and boom, there was your winning trade, right? And You exit, you get back in, and boom, a real nice winner. So they are worth the wait, trust me. The one thing you want to look for when you get a breakout out of a long-winded channel is have a look at the 20 and see if it has started to slope. Usually if it has, that's a good indication it's going to work out. Okay. Now, Quan, I'm not sure what time frame you want to look at, but just to show you that it doesn't matter if you're on the daily or the weekly or the monthly, etc. You still want to focus on those areas where you have slope in one direction or the other. Okay. You want to avoid the chop. That's what you want to do is avoid the chop, wait till it starts to trend, and now get in. This was that recent breakout out of that channel. And look at on the weekly, we were sloping real nicely, right? And if you look to your left, we were about to overcome an area of resistance that had been in place for a long time, and off it went. And it is still trending very well. Let's look at ExxonMobil. Right? Same thing. So this is the weekly. Let me go back to the daily. Here we are. So if it's choppy, right? That should tell you it's a risky environment. When you see price going back and forth, if you see the width of the bars, right, from high to low are all different sizes, that should be a warning sign. Okay. When they're all very similar in size, that means you had a real nice trend in place. So when you saw this move here and you saw this little pullback come back to the 20 and you got that circle with this kind of slope, this is the no-brainer trade. This is what I would take 100% of the time. Okay. And it will work out a very, very high percentage of the time. Why? Because it's trend and momentum. Very, very strong momentum. For whatever reason, and I never pretend to know why, but for whatever reason, buyers are buying. They're fully in control. At the end of the day, when you're trading, as traders, what you want to figure out is who's in control. Are buyers in control or are sellers in control? And it's pretty obvious when you see something like this, who's in control. And so you don't want to figure out why. Look at all the different things going on in the world with the war in Ukraine, inflation, the Fed. I mean, just so many, whether this company is making money or not, what their margins are like, their EBITDA, all these things. It is impossible for you to look at everything and come out of there saying with 100% certainty that I know this company's going higher and this one's going lower. You're kidding yourself if you think you can do that. Nobody can. Okay. None of us know what tomorrow brings, but what we can do is play the odds. And when buyers are fully in control, the odds are price is going to go higher, right? When price is on the right side of the 20 and the 20 is sloping like this, chances are price is going higher. There's a much better chance of that happening than the opposite. And that's what we're doing is playing the odds. All right. Let's see. Sandra wanted to look at Citigroup. I think we looked at it a little earlier. I'm not sure if you were here with us, Sandra, but here we are, Citigroup. And again, all we have to patiently wait for are the times when we have a trend in place. So again, if we look at an area like this, it was going sideways, right? It was channeling. And the 20 period moving average will give us a good heads up that that's the case. But as it starts to slope, right? As it rolls over and you start to get that move lower, and you can say to yourself that we have lower highs and lower lows. From that point on, this should be a signal you take. This should be a signal you take. This should be a signal you take. The second it changes color, you're out of there. Okay? Very, very simple. So sometimes you'll get a move like this where it changes direction immediately, right? Are you going to want to go short here? I certainly would not. Why? Look at the 20. It's sloping higher. It's not sloping lower. It's going against me. So are the odds with me or against me? The odds are against me. Now, hindsight's 2020. We can look back and say, boy, were we wrong? that would have been a beautiful short. But 9 times out of 10, that won't be, not with slope like that. But anyway, it for whatever reason, there was such a sharp move lower, it took a long time before it pulled back to the 20. Okay. But we patiently waited. And at that point in time here, there was a nice strong slope. Okay. And it did move in our favor, didn't it? Just like it did here, here, etc. Now, I haven't focused enough on this. This is one of the things that I love most about Victory. It's not so much the entries, okay? There are a lot of different ways to select entries, but getting out of there quickly when things go wrong is super important. And what you don't want to do is give back all your profits after a nice run, right? So that's what Victory will do, is get you out of there fairly quickly. And that gives me comfort getting into positions as well, because I know that if I were to get into a position, say here, and it quickly turns around on me, it's going to get me out very, very quick. So my loss is going to be a small one. Okay, I hope that helps. Bob wanted to look at FDX. Let's look at FedEx. Again, you can quickly, in a matter of seconds, spot the areas where you should have traded. Now, when we look back at a chart, of course, we're looking back, it's easy to spot, right? Is it easy to spot now? So you should always focus on the most recent candle here. And what is this telling us? Well, it's showing a green arrow today. But from what I've taught you today, would you go long here? I certainly would not. Why? The odds are against us. So we've had a trend lower this whole time. The slope is lower. It's not going higher. So it's not sloping in the direction of the trade that it's telling us to trade, is it? So this green arrow should be looked at as an exit from all these previous shorts. Now it's telling us the short is over. Now we sit and wait. And if the 20 starts to slope higher and price pulls back to the 20 and sets up, then we go for it. But this was a no-brainer short. This was a no-brainer short. This was a no-brainer short. Worked out beautifully. Okay. And again, you don't have to short the stock. You can buy a put, etc. There are many strategies we can look at. But again, look at how clear it is when you look back. When it's channeling, right? And it breaks out of that channel. And you have slope, right? Look at the 20 at the time here. So the 20 throughout here was pretty flat, right? But suddenly it started to slope and we broke out. And so at the time we broke out, did we have slope? No. So I'm not going to sit here and pretend that I would have taken this. I would not have taken this. If I would have, it would have simply been because we closed below this range. And that's why you want to mark these lines. So you can say, okay, I'll take my shot at it. We broke below it. But is it a high percentage play? No, not on that day, because the 20 wasn't sloping. As we progress, though, and then we pull back towards the 20, now this is what I would call a high percentage play. All right. Let's see, we have a question from Stefan. Do we exit when the bar crosses the slope or when it closes below? Well, first of all, if it were to cross it, you would get an exit signal somewhere very close to it. So you wouldn't be waiting long. If it just crosses it but ends up closing the day back below, there's no reason to exit. But it wouldn't go very far. You'll never see an example where you'll have 3 or 4 bars on the opposite side of it, and then you get an exit flag. You won't see that. The system gets you out very quickly. What may happen though from time to time though is that it gaps. This is what I'm talking about, a gap, like it jumps, but it may happen that you're in this trade and then there's news and it opens up here and it gap. That could happen. Okay. It's rare, but it could happen. But that's why you want to start scaling out along the way. But generally, what you want to work towards is getting comfortable enough with the Victory system that you stay in it until it tells you to get out, meaning it gives you an opposite color arrow or an exit flag. Okay. Try to stick with the trade as best as you can. Okay. And follow those rules. Let's see. Let's look at a few others here. Costco. Costco had been trending for a very long time, and we can see it even on a higher time frame. We can bring in more data, right? How clear it is. It's basically going from the bottom left of your chart to the top right. Just a beautiful trend. So how easy is it to pick off these trades with slope? Flat areas you want to ignore, right? Areas with slope you want to take. So if you're looking at this, even when you're just starting out with victory and you're not quite sure, is this enough slope or isn't it? Is this a consolidation area? Is it not? Yes, you may have those questions, but it's pretty clear that these three are trending nicely, that this one is definitely a no-brainer trade, right? The clear ones stand out. That's what's so beautiful about this. The clear ones stand out, and your job every day is to find some of these, and they're not hard to find. We have a scanner included in this that I will show you in just a second. What we also have is a couple of training classes that go along with the indicator. Well, we will go in depth on why you want to stay out of these areas and how exactly you want to trade them and so on. We spend the bulk of the time comparing one setup to the other and showing you exactly which ones you want to take and which ones you don't. Okay. Apple, a very popular symbol that most people follow and trade. Again, can you spot the obvious ones on here? I know this is a weekly chart, but it really doesn't matter. Can you spot the obvious one? Even though this was a big meteoric rise, it is not an obvious one, is it? The 20 was flat, right? Now, let's say this was the all-time high, okay? And we were in a flat situation here, but then price came and took out the all-time high. You definitely want to take that because, there's no resistance overhead whatsoever. Finding setups like this one, for example, where the previous pivot high is very close by and it happens to be the all-time high, that is ideal, okay? Because not only do you have a strong trend with strong momentum, but you have really no resistance overhead. These are the ones we look for on a regular basis, and you can see how beautiful it worked out. Okay, now here's the daily. Recently, a chop fest, right? Crazy, crazy, wild bars, all different sizes, all over the place, right? So, are we eager to jump in here? Maybe on this one that has slope lower, right? But there are very few trades you're going to take. And so following these rules not only keep you focused on the trades that put the odds in your favor, but will automatically result in you trading less in an environment like this, which is exactly what you need to do. This is more a time where you want to preserve what you have rather than focus on gains. Okay. Yet there's always stocks moving. There's like you've heard a million times, I'm sure, there's always a bull market somewhere, right? The energy sector is one that has been very strong recently. There you go. So while other things were dropping, right? I mean, look at Peloton, Zoom, all those stocks that did well during the pandemic have completely retraced their moves while, something like this was going higher. Let's look at Peloton for a second here, right? And let me go to the weekly chart. I want to show you this specifically because, so first of all, the reason why you're seeing yellow bars here, maybe we'll use Zoom as an example. Well, let me explain this. The indicator needs a certain number of bars to calculate the formula behind it, and that's why on this weekly chart, Peloton was a newer issue, and you wouldn't have seen it. Let me show you Zoom. I think they had a longer history. Yes. So here we are. zoom on the weekly, right? We had the February 2020, February, March 2020 lows, the pandemic lows. And we started to see that meteoric rise, right? Where everyone started working from home and using Zoom. And again, entry here, look at the slope on the 20. Entry here, look at the slope on the 20. What we call a no-brainer trade. Beautiful, right? What happened when it moved to the other side of the 20? Nothing really good happened, did it? In fact, it's pretty much given all of that back. So whether you believe strongly in a company or not, okay, there are times where it is in favor and times when it is out of favor. Meaning, remember the number one rule. As a trader, you're trying to figure out whether the buyers are in control or whether the sellers are in control. As long as the buyers are in control, price should go up. When the buyers are no longer in control, there's no reason that it's going to be going up. If no one's buying, it can't go up. So whether you believe Zoom is going to be the platform that everyone uses from now on and is going to make a ton of money in the future, there are so many reasons why something would be sold. Does Zoom deserve to be sold this hard? I don't know. Maybe it does, maybe it doesn't. If it breaches the 20, get out of there. Trust me, it'll save you so much money. Going back to the dot-com bubble, when 1999, 2000, when everything was going through the roof, all those new tech stocks were going through the roof. If everyone had just sold and kept their gains after, after price moved below the 20 period moving average, there'd be a lot more rich people out there. But what happened? They held on, thinking the Ciscos, the Intels of the world were going to just keep progressing forward and making a ton of money. Yet we saw them all collapse, give all the profit back, and then go from there, right? So, but look how easy it is to pick off these trades, right? Would you have gone short here? No, you would not. Why? Momentum was higher. Right? Would you have gone short here? I mean, it started sloping lower. Maybe you would have, but not a high probability trade. This one was better. And yeah, you can say, hey, if I stuck with it, it would have been a loser. Yes, it would have. Not a big loser though, right? Then we go flat again. 20's flat here. Do I get in here? No, I don't. I could mark this low and say, do I get in when it takes out the low? Right? We could, but look what happens. We get that dot right there, and now look at the slope. That's the magic formula right there. And look at that move. So was it worth waiting for? Yes. So if you're selective and you follow the rules, you would have picked off this one, you would have had a small loss here, and you would have had this one. And now still in that trade. So that's how this is supposed to work. And with the 2 training classes, we will show you exactly how to do this, but it really is this simple. So, and I'm going to try to quickly run through a few different types of markets now, because there are a couple other tools that I want to show you, and I'm quickly running out of time here. This will work on anything: stocks, futures, forex, crypto, right? Who trades Bitcoin or Ethereum here? Same sort of thing. If we look at this, right? What do you want to look at? Which trades would you take or would you not take? First of all, notice the difference. This is what we call smooth, orderly action, right? This is what we call a chop fest. You can easily spot it. And the reason why I want you to look at thousands of charts is to train your eyes. If you can train your eyes, it'll pay off in the long run. There's going to come a point where price settles down and is going to start trading orderly again on Bitcoin. It's been a chop fest for a long time. But even if you want to resist the urge to trade, or not resist the urge, I meant, and jump in on Bitcoin, where do you want to jump in? You want to jump into an area where there's slope, like this one. So even throughout this mess, there were a couple of areas where you could have gotten in and made real good money. And it's the exact same setup that comes together over and over and over again. And that is an arrow or a circle near the 20, where the 20 is sloping significantly in the direction of the trade. That's really as simple as it gets. It doesn't get any easier than that. And that's what you need to focus on. Here's Ethereum. Do you consider this a slope worth taking? How about this one? Is that a no-brainer trade or what? Look at that. Okay. Now you could say, well, maybe I wouldn't short Ethereum. Okay. Would you go long Ethereum? You certainly would want to here. Crude oil, like futures. It doesn't matter what you're trading or what time frame. There it is. The easy ones, the clean ones stick out. They're obvious. This is what you want to focus on. Okay. If you want to focus on a lower time frame, pick something active like a Costco, an Apple. First of all, look at these trades. Are these not, no-brainer type trades? Look at the slope. It's so obvious. But let's go to say a 5 minute, right? Now, not much action there. Wait a sec. Is this? There we go. Let's have a look. The 5 minute. This is a 5 minute here, going back a few days. April 29th, May 2nd, etc. April 28th. So last Thursday, last Friday during that drop, the Monday, right? This is a 5 minute time frame. Does it look any different than the daily or the weekly? It does not. And there's a reason for it. It's price action. It's technical analysis. It's exactly the same thing. Okay. Sandra was asking if that line is a 20 period moving average. Yes, it is a simple moving average though, Sandra. There you go. 20 period simple moving average based on the close. Not exponential, not weighted. It's just a simple. All right. Now, let me show you a couple of other pieces that come with this indicator. If you go to the top left of your Metastock platform and you click on view, you come down to here, expert commentary. Click on that, it'll bring up this box. Now it'll tell you a bit about myself and trading wins, etc. It'll also give a number to the slope, the current slope. Now, what it does is always default to the most recent candle, okay? And actually, I should go back to the daily time frame because that's what it's going to focus on. So what you want to, now this arrow that you see above the most recent candle, you can move that above any arrow you want, either by clicking on it. There you go. I just moved it here, or by using the arrows in the top left corner of the expert commentary window. We can move it backwards or forwards, right? Now, in here, if we go, say let's go down here. This will walk you through this. This is something you can use that will kind of hold your hand through the whole experience. It will tell you what is going on, whether we're in a short trade, a long trade, etc. Okay, so you'll notice here that it's saying now it's signaling a short sell entry, right? I think we're over here. And it'll tell you if you trade options, it'll give you a few ideas of how you might want to trade your options, what kind of expiry you want to look at, the kind of delta you want to choose, etc. So it's helpful that way, right? And then along the way, and let me go to the long trade here. There we go. So here, this green arrow, there's the green triangle. So it's telling you it's signaling a long opportunity, right? Now, if we progress and move forward, now that it's in the trade, look at what it does. It gives you a stop level, okay? In this case, 451.48, right? So that if you have to go to work, you can't watch your screen all day, you can put a stop order at that price, okay? Now look, if I follow it, one more candle, it now changes. The stop is 452.23, so it's gonna help you trail that, okay? So If you're away from the screen, you can set a stop at that level. And if the price pulls back while you're gone and that gets tripped, then your order will be sold. Otherwise, you wait until you get a red arrow or an exit flag. Okay. And it will keep doing that. As we go through, you can see that this number just changes the whole way through. So it's a nice way to help you trail your order. The other thing is if you go to the top left and click on the letter P here for Power Console, and go to the third box down on the left, which is the Explorer. This is where you can scan for new trade setups. Now, I have my favorites here, but the top portion of this box is all the different strategies that you can scan for. They're in alphabetical order, so all of mine, all the Vora ones are down here. And what you want to select is Vora Victory Filter. Now there's a Vora Victory alone here and Vora Victory Filter. The difference is the filtered one filters for slope. It will only select the symbols that have a slope degree of 5 or greater, okay? Which is what I determined is a really decent slope. So you want to mark off that box, Vora Victory Filter. You can also do Vora Victory Re-enter, which are the circles, okay? So Vora Victory Filter are the arrows, the new arrows, green or red. Vora Victory Re-enter are the circles, red or green. And then you come down here and select which market you want to do. I'm not going to do all 5,500 optionable stocks. That's what I normally look for. Let me see, where am I? Let's go to index constituents, maybe. Where are we here? And select, say, the Dow 30, and just for time, the NASDAQ 100. Okay. All right. So you can see if you scroll back to the top, it's telling me I've selected 131 instruments to look at now. Out of, you can see how many there are here, 316,000, et cetera. That's global. By the way, this will work on any market, no matter where you are. I've tested this on the Indian market, Australian market, UK, Singapore, you name it. It's technical analysis. It'll work on anything. You go to the top right and you select your time frame that you want to scan for. So if you're trained on a 5-minute chart, you want to scan for 5 minutes. I usually do the daily or the weekly. I'm going to leave it on daily. And then you click Start Exploration. Okay. And you'll quickly see how fast it will scan and populate any sort of results. Now, I do want to tell you one thing, so there's no surprises. While the bar is open, let's say we were looking at this on a daily bar, and throughout the day, price is going up, it's coming back, it's going up, it's coming back, right? There will be times where you'll see the green dot and then maybe it'll disappear. If it's while the bar is live, okay? But once that bar closes, if that dot is there, it stays there for life. There is no repainting, okay? I'm sure you've heard that term in the past. There's none of that. So if you're on a 5-minute bar and within those 5 minutes, price is fluctuating, if price pulls back, that may disappear because the formula no longer, comes together. But if that 5-minute bar closes and that signal is there, it will remain there for life. Okay, just so you know. So you'll see here that out of these 124 or so instruments that it scanned, we have two possible trade setups and a couple of rejects. 122 rejects. Okay, and they could have been rejected for many different reasons. But we have Raw Stores and Skyworks. What you'll notice here, the columns, the new long, new short. If there's a 1 in one of those two columns, that's the type of setup it is. So Raw Stores is a long setup. Skyworks is a short setup, okay? The slope is the degree of slope. So when it's a long setup, you want to see a positive number and you want to see that over 5. Anything over 5, and the higher the better. So 9 is pretty good. When you're short, you want to see a -5 or greater. So -13 is pretty good. This is the closing price. This is the symbol. You can cut and paste this list in to watch this. You can print it, do whatever you want. We can sort by slope. There's only 2 here, so there's not much. Or you can just highlight it, click on open chart, and you should see the chart here. So there's raw stores. So what do we have here? We have a nice degree of slope, right? And we have a new green arrow. There you go. Potential for a long. Now, in the training classes that come with this, we're going to teach you how to compare this to another setup and decide which one puts the odds more highly in your favor than the others. We're also going to talk about what do you look for? Do you look for, is there a lot of resistance overhead or support below, that sort of thing. So we'll go through all that. If you look at Skyworks, it should be a short setup, and there it is. Significant slope, and there you go. Okay. When it's too far away from the 20, I wouldn't jump on that. As price moves away from the moving average, it tends to snap back. So that signifies additional risk. But if you can get in near the 20, that's exactly what you want to do. Okay. So again, a very, very simple, straightforward system to use, can be used on any market, stocks, futures, forex, any time frame. It really doesn't matter. Any exchange around the world, it really doesn't matter. And I can show you, what is it? I think it's dot NSEI, I think, is it? I'm trying to remember the Nifty. Yeah, the Nifty 50. There you go, in India. So this is a completely different index, completely different country, different stock exchange, and have a look. Doesn't it look the same, right? Aren't these obvious no-brainer trades? They are. Aren't these sideways trades that flat 20 you don't want to take? Yes, they are. It works exactly the same, okay? So I'm happy to stick around for more questions. I don't think I've answered all the questions, but I'll turn it back to Jeff so he can read off some of the questions, or also tell you how you can get yourself a copy.
As always, looks great, Vince. Good job today. We do have a question, Meet Newfield, in the chat. He wanted to know what scanner you're using.
This is the one included with the Victory add-on with your Metastock platform. It's all part of the same platform. So it's part of Metastock and part of the Victory add-on. It all comes together.
All right. Then he wants to know what the cost is. So I'm going to go ahead and just take over the screen for a second. I can try to talk about that. We've got a really good discount on it today. I don't see any other questions first. So I'm going to go ahead and grab everything. Vince, thanks for coming in today. Thanks for working with us for decades now. When it's more than 10 years, that's decades, right?
Yeah, that's
right. How it works. Okay. All right, cool.
Thank you.
Go ahead and kind of grab this. Thank you again for coming in. We appreciate it.
All right.
All right. I'm going to go ahead and kind of get in here. Go ahead and show my screen. Here's a picture of the box. And what I'm going to do is just kind of walk through kind of the pricing for a meet. So this is a product that we sell as a one-time cost. One of our most successful add-ons, most popular of all of last year. And I think you should give it a try. People really, really like this add-on. What I would say, okay, yeah, there it is. First bullet, you saw how it has a detailed talk commentary. It tells you what to do. You get the expert alerts, the full market scanning with the triggers and the re-entries. The filtered scans. I actually was running the scans on a daily basis with Vince, and I'm like, hey, I want to write a version of the scans that just filters everything where the slope is not going up or going down for short trades. And so we put together those filtered explorations as part of an idea to kind of make them easier. And they're the only ones that I use now. They do also include system testing, so you can do market system testing with it. And again, it's a it's a great add-on. Normally the add-on cost is a $2,000 cost, $1,997. Here at the webinar today, we're going to do like a special offer where you can get it for $995. So what that's going to include is the classes that actually Vince talked about. I remember we sat down and we did a couple of sessions with him just live where we sat down and recorded them, and he did a really, really good job with them. So here at the event today, we're going to do a $9.95 for the webinar offer. With that, you'll get the, if you don't have Metastock already, I'll tell you a little bit about Metastock. Metastock's been rated #1 in its price category for 27 years in a row. It's going to include those bootcamp classes, both of them. We recorded 2 different sessions and they're both included. And not only that, we're going to give you a money back guarantee. So if you try it out, you get it installed, you find it's not helpful for you for whatever reason, you can return it and we'll give you a refund. So, but I think you'll like it. It's been, like I said, a very, very popular add-on. And to take advantage of that, you can give us a call. The phone number is 800-882-3040. You can also visit us online at metastock.com/saleschat, and we'll be happy to kind of help you with that as well. So again, the phone number 800-882-3040. You can also go to our chat, which is metastock.com/saleschat. So let me ask a question. Luca wants to know if this considers daily volume or relative volume. It does not. You could add volume on there and kind of take a look as an additional confirmation. The scanner does not incorporate volume. Amit says, does the Metastock scanner scan for sales growth and cash flow growth on different companies? What are the fields that you scan for? So with Metastock, what you get is a primarily technical application, Amit. But it also comes with the Metastock real-time, which we're going to include a trial to. It comes with a product that was developed at the cost of over $1 billion by basically Reuters, and then they became Thomson Reuters, and now then it became Refinitiv, who's now owned by the London Stock Exchange Group. Anyway, they put together a $1 billion product that includes all of their news, all of their decades of fundamentals, and it's really a program that they built for institutions. They're a huge competitor to Bloomberg. That'll actually be included with this trial, Amit, and it will allow you to do scanning on earnings or cash flow growth or companies, and you can do that here in the US. It also covers companies from over 200 different global exchanges, so it's got a very, very global scale. And that's actually will be included as part of your trial, so you can give that a go if you want to. So in Metastock, typically you're going to be searching for price action and what's above the moving average and stuff like that. But if you want to scan for growth, you'd be able to do that in Zycon, or I'm sorry, Zenith. In any case, yeah, there you go. The phone number again is 800-882-3040. You can also chat online with us at metastock.com/saleschat. I want to say thank you again for Vince for coming today. I appreciate it. Thank everybody. Thanks to each of you for coming in. I hope you're well. Stay healthy, stay safe. We'll see you at the next one.